All righty. Hey, welcome everyone. Welcome to the trade findings and adjustments for the 23rd of February. This is Tuesday evening. Today we're going to go over risk tolerance, and I hope some of what I'm going to share today you won't hold against me. And more importantly, I hope that you'll understand how to apply some of my risk tolerance techniques to you guys. I've got a link here. I'm going to go to the actual link. As I'm going around and doing my studying and so forth, I found this link literally about a month ago. And it's the BIDU stock forecast for 2021. I don't know this alt perspective. I don't know who they are. I just understood the numbers. And as I read through their numbers, his numbers made sense to me. They were close to what I was calculating. Hey, the share price has appreciated 170% since November, right? Hey, they've got monopolistic practices, or being monopolies is the best way to say it. They're working through them. Hey, they've got all kinds of opportunities and they're moving bigger market caps. Really, as I work through their numbers, even to what caused the recent price increase, I agreed with him hand over fist. He was talking about the stock rising to like 269, and that was it. He actually goes to say he totally underestimated it. He called it the unpredictable, unbelievable run in BIDU. He said, hey, though, you had to wait through some heartache. For most of us, we doubled our share count here. We picked up extra shares. Instead of just waiting for the return, we proactively did something to make our time while we waited helpful. We protected. And obviously, he thinks the high side it could get to is 273. He even goes to say, hey, the highest target price is 299.55. There's plenty of upside. And he gives you the nice little chart to show you how high it can go. 299, 238, 207 from 151. Great return, right? As you go through valuation, how much it's worth, that maybe in the next year could hit a target price of 359.57. But there's some pretty good assumptions that are related to that. And he puts it out there, and I agree with him. But basically what he ends up saying in the end, and I've got all this in here for you guys to read, what he says in the end is, hey, it's not going to get there. It just can't get that high because it's already moved up so much. When we look at what we're doing, it's a big portion of portfolios. It's a huge portion of portfolios. For the Hurley investments, basically, overall, it is 20% of the portfolios. Whether I'm using mine, Coda, whatever section we have you in, plain and simple, BIDU is 20% net value of the portfolios, if not more, because it's at 3.8. If I do the math right there, 3.8 million divided by 15.3, it's 24.8%. It's 25% of the portfolio of investable money here. There was a problem with BIDU today. BIDU this morning, for all intents and purposes, well, it dropped over 10%, right? This was the chart of BIDU. It closed at 135 yesterday. Excuse me, it closed at 335 yesterday. It went all the way down to 290 today. So a $45 drop, roughly 15%. And then it came back up to close out, only $13.18. We tried to get puts on at 315 today. Couldn't fill them. Tried 310, couldn't fill them. We got some puts on at 300, some other puts on at 290. Of course, the stock came and it went. So we lost coming and going on BIDU today. Overall, it wasn't too rough in the market, It was kind of a bad day, 99,000 down on an up day of 0.5%. Little embarrassing, but it's just a matter of, hey, here's where we're at. Here's what happened today. Thank goodness we had other positions that were up more, like Disney and Visa and what have you. But it was a rough day in today's stock market. For that reason, for those of you that have shares, here's what we're going to do. We're going to take a profit. If my risk tolerance at 25% of the portfolio is being tested, it's time to take some profits and lighten up. BIDU has a cost basis of 156. We're looking at 322. It's a doubling. We've got all of these other positions in BIDU that did remarkably well today. It's time to lighten up on some shares of BIDU, convert them to this strategy of being somewhat risk-free, to find a way to convert your profits into more profits for you to leverage those profits into the future. Today, this morning, I felt like an amateur. Kevin, how could you do that? How could you say that? Not good for business, right? When you've seen BIDU make this kind of run, where it's down at $88 right here, sits and floats around 120, and then you're up at 322, BIDU gets back up to that 340, that 350 range, we're taking half the stock off the market. We're going to book over 100% return, if not probably closer to 200% return from all the shares that we added. We're going to make BIDU a profitable story for you guys and leverage profits instead of having your portfolio manager's risk tolerance get tested. I was pissed. I was pissed for the day. $15% drop, $45 net drop, right? 15% of the value of the stock. Never got back up to 235. Nothing like putting protection on at 300 and 290. And at the end of the day, rolling it up to protect at 320. BIDU's done this a couple days in a row. Am I going to learn from past experience? I certainly hope so. But to book $150 a share, what a great opportunity it is for BIDU for us to take some profits and convert those profits for $22 to $25 into leap bull call positions. To take those profits and create a stock replacement strategy that leverages that money. Do you think the weak cat's now been shaken out of BIDU, freeing it to go up? Maybe. And if it goes above 340, I'm going to watch it. If it gets all the way back up to 354, we're going to take some of the positions off the table. We will create a stock replacement strategy so you still make money on the way up, but we're over leveraged in BIDU. What do you think the impetus for the sudden drop? It ran up too far too fast. We have it down here in May at $88 basically, right? $88 up to $350 at one time, $345. That's a 400% return. It quadrupled. For all the people down here at 120, it's a 200% return. People are more apt to take profits than they are to let it continue to go. It's like all those poor people that were at GameStop. So the sudden drop, too far, too fast. We have big money, huge money, rebalancing BIDU. We have ginormous volume that doesn't make sense. Well, Kevin, I thought you said last week that BIDU could get up to 450, which mathematically it can if you add in all of those 2 years of earnings that it got no credit for, right? If you go through 2 years of earnings on BIDU, where in this time frame it got no credit for its earnings, you can come up to what I tell you, 437 to 455, somewhere in that range. Well, Kevin, that's like a big range. You're giving it like a $28 range. Yeah, I'm kind of giving it one standard deviation. One simple move. 8.33% is where I'm trying to get to. So it's probably actually 433 to 455 is that standard deviation move that could occur. If you add up all those earnings and project it forward, that's how you get to 455. I don't know how you justify the price right now where a stock, plain and simple, well, triples, 120 up to almost triples to 354 intraday, right? Stocks just don't move that way. Overbought. This is the fast and the furious in the stock market. It's in for a drop and it's become too volatile to trade. Today was awful. So because today was awful, we're going to cut the shareholders in half. We're going to cut the risk in the overall Hurley investments from 24.8% to 12.4%. And we're going to spend $22 to $25 for each share of stock. We're going to replace it with a stock replacement strategy that has upside opportunity and some downside protection already built in the position. The neat thing was, through all of this today, what did very, very well were exactly what I want to put you into. Right here, stocks down $13 on 600 shares. Stocks down $13. We're down $27.24. On a $13 drop on 600 shares, that's like a $7,800 drop on the share value. We're only down $27.24. I love it. That is awesome. Going to a couple of the other ones, they're a little different. Rough day for the in the money ones, right? We're getting paid what? $950 on these ones to make 21,000. This was brutal. It was a $10,000 drop. If we took that same 2,900 shares though times $13 should have been like a $38,000 drop. We made up 75% of the downward movement. It's this type of mentality or thinking that we need to be prepared for. And portfolios are over leveraged in BIDU. It's time to take some profits. Someone just asked me today, well, Kevin, what do you mean by that? Well, you're not going to see the fingers pointed to me, but early on in my career, I watched Apple go up to like a 95% return. And I wanted a 100% return. So I stayed in it. Oh, it's almost there. Drop down to 80. Oh, it's going to come back. Drop down to only 75% profit. All right, well, it's now ready to go up. Yeah, I got out of Apple at 100% return, minus one of the zeros. My 95% return turned into a 10% return after sitting through it for like 27 months. You have to have some positions in place to take some profits or protect some profits. And BIDU has become too volatile to accurately protect your profits. So when my risk tolerance gets pushed, I need to have a game plan to not make knee-jerk reactions to our positions. And it's difficult. It is a difficult process to do. Game plan, when BIDU gets to 340, maybe 350-ish, we are selling half the stock and converting to a stock replacement strategy. Leave long calls for growth. Leave short calls for protection. We're going to pay somewhere between $22 to $24 to $25 to try to make 75 from the movement of 350 up to 450. And we're going to give ourselves basically 2 years to do it. Some questions have come up. What if it shoots to 450 by June? Then we'll put another set of these on. We'll add 450s to 550s. We'll try to give it at least a year and a half to get the next run up. But we're not going to take the risk that's associated with the position right now. It just doesn't make sense. For those of you that are not familiar with options, please go to my Hurley Investment. I talk about a stock replacement strategy in Exponential Returns Understanding Part 2 and Exponential Returns Understanding Part 3, your bonus. They're 25-minute long videos. Go watch both of those. But we're going to leverage your profits. We're going to get more cash heavy. And the game plan is to sell off half, if not 2/3 to 3/4 of the stock positions. Lock in 200% returns over the last 2 to 3 years. Replace that money with maybe a fifth of the profit, a sixth of the profit actually. Use a sixth of the profits to still be in the positions, to still be able to make money, and to not have your portfolio manager get frustrated and panic like the panic I went through this morning. There was not enough time to catch protection at 315. So our first protection for the day was down at 300 and 290. Nailed the bottom, pulled it back up to 320. We'll probably have a drop again tomorrow, and it'll probably work its way back up. Or we might just have a run up. It just might do like it did last Friday and run up $44. And if it does, a ridiculously nice profit. Hundreds of dollars on your ownerships. Convert it to a stock replacement strategy to leverage those returns. get a little cash heavy, and not see this type of volatility or movement in your portfolios. Are there any questions in regards to how we're going to run BIDU or regards to risk tolerance? Because BIDU has grown so fast, so quickly, yes, William, it has literally become 24.8% of the holdings. That is 100% over leveraging a portfolio into one position. Someone asked me the question the other day, well, what about Apple? You're letting Apple run. Apple's a little bit different. Apple can create its own put like it did today by leveraging its hundreds of billions of dollars to buy more shares. There's not another company in the world that can do what Apple can do. Apple's going to give 1 million shares as a performance bonus to Cook. Could you imagine a company paying a CEO a stock performance bonus that right now would equal $126 million? At today's price, Cook's going to pick up $126 million stock salary performance bonus. Can you imagine a CEO earning $1 billion in his lifetime for running a company? Cook has that opportunity. He's heading that way. Maybe it's only going to be $500 million. Geez, I can't imagine earning $500 million for being a CEO. All right, if there are no questions, for those of you that own BIDU, we get back up to that 340, 350. I'm going to be putting my finger on the button and we're going to lose half of the shares immediately. Maybe we'll lose a third at 340, a third at 350. And I'm going to replace those shares for an amazing profit with the stock replacement. You'll make at least $150 per share, if not more. We're going to spend 22 to 26 to capture the next $100 on the way up. Looks like there are no questions. Hopefully this was an explanation for some of you who are watching what was going on in portfolios today. Guys, have a great day. Thursday, my plan is to go over current positions that we are in. I think I've got 4 or 5 of them available that I'm going to show you. If you choose to get out of General Electric, you're going to have a pretty nice return there. Accounts look pretty darn good. Guys, take care. Pleasure seeing you tonight. I look forward to seeing you Thursday morning. And until then, be smart with your trading. And I hope this helps you understand what we're looking at and why we're starting to do certain things that we're doing in portfolios. Have a good evening, everyone. Good night.